Good day once again, and welcome to another session on feasibility study. This time we will have the second half of our discussion on the contents of the fourth chapter of the UL Prescribed report. It will be focusing on the financial feasibility as well as the socio-economic feasibility. Let's begin with financing feasibility. So, what do we uh, have part of the financing feasibility section of the fourth chapter? So, here you will need to discuss the capitalization that will uh, be required to finance your project and who the financiers for the project will be. So you will need to determine as well what will be the most adoptable financing scheme for your business venture. So let's start with the discussion of total project cost. So we in this part of the feasibility study uh, will need to state your total investment cost. Okay, this is done by presenting all your project's cost requirements from all the previous chapters that were discussed in the previous sessions. So you will need to have it itemized and following the format as follows. So you will have a matrix presentation of the different requirements of your proposed business. So we have, for example, in this format, we have for the first column the items, the second column the category, then we have the third, fourth, and fifth for debt, equity, and total, respectively. So what will be identified in the category are as follows. So we have the fixed capital costs that will include land, site preparation, and development. Then we also have structures like buildings and other civil works, auxiliary, and other service facilities. And then we have technology costs for technology, royalties, and others. And it will vary depending on what will be needed and required in your proposed project. And then we have also the uh, itemization of the machineries and equipment and accessories, the furnitures and fixtures, for example, the other fixed capital cost and contingencies. And then we have at the last row for the total initial fixed capital cost. Note that the last columns will be further divided into local and foreign sources as the case may be. But since this is a startup business, I would prescribe that it will only be focusing on the locally available sources. Okay, and this will be done on a more detailed presentation. Okay, then we have for pre-operation capital. Okay, which will include, of course, the costs involving pre-investment studies and investigations, management of pre-project operations like final planning, supervision, coordination, test runs, and the like. We have recruitment and training, suppliers arrangements, arrangements for marketing and promotions. We have build up and connections and networks, legal permits, and of course others, which you will need to specify just the same. And then we have other pre-operating capital costs, and then we have contingencies, and then we have the total pre-operating capital cost. And then we have for the third, we have the initial working capital. The initial working capital will include the current assets. What will be for the current assets? We have inventories, raw materials, work in process, finished goods. And then we have cash on hand for required cash balance. And then we have accounts receivables, other current assets. Okay. And please specify, okay, the types of the current assets that apply to your business type. Then we have pre-operating productions. So this will include cost on salaries and wages, raw materials, and overhead costs. Okay, and then we have contingencies. And then we have the total initial working costs, and then you will need to have the overall total for the entire project. Okay, so we have the total initial working capital plus total pre-operating capital cost, and then we have the total initial fixed capital, which you will need to place, okay, in the total cost of project. Okay, so a list of different types and sources of capital is presented in Annex 7.1, which you may find um, a handy tool, okay, in aiding you to identifying in more specific terms what may be required depending on the type of business you would like to put up. Okay, and then we have the financiers. Okay, so in this particular section of the financial feasibility, okay, you will need to present your sources of capital for your project. Okay, you may follow the tabular presentation um, flashed on your screen right now, where you have the following information, okay, in which is very much similar to what we have presented for the total cost. Okay, so we have for the first column on the item number, and then we have category for the second, the third, fourth, and fifth for debt and equity, but the last column will for this time be on the percentage of contribution. Okay, thereby, if we will have it sum up, okay, it gives you a total of 100%. So present next the terms and conditions of your creditors, meaning if you will have to borrow some amount of fund, okay, what will be the conditionalities? Okay, so you will need to stipulate um, to have a listing of the stipulations of the terms and conditions insofar as uh, the loan agreement is concerned. So this may include a timetable for your loan application, processing and release, and of course the details of the terms and conditions of your loan sources. That's not loan, but it's loan sources. Okay. So a list of requirement and procedures in acquiring loans, okay, and insofar as loan applications are presented in the next 7.2 for your guidance. So now that you have determined, okay, after having presented your total cost and your financiers, okay, you will now be ready to make your project's financial projections and analysis. So you will need to review all the other discussions that we have had in the past just to make sure it is consistent. So from your management and personal feasibility to your marketing and of course your production or technical feasibility. So it all goes together. Okay, so everything is in order. You are now ready to go to your next major aspect, which will be your project's financial feasibility. Okay, so what we have here for financial feasibility, it is where you will have to determine the financial soundness of your project's proposal. Okay, so here you will need to start with your major financial assumptions. Okay, which you will need in computing your financial statements, the projected financial statements, and from these statements, you can then come up with the financial and sensitivity analysis, and finally your proposed system and forms design. So, in more specific terms, the financial feasibility will commence with the identification of the major assumptions. Okay, so you will need to identify what assumptions, okay, will back you up in your projected financial statements. So what are assumptions? Assumptions are parameters that you lay down for basis of your financial um, projections. So the following considerations may guide you in this part of the discussion. So your project timetable and number of projection years. Since the amount of capitalization uh, totals to about 300,000 to 500,000. Okay. So I you may settle for at least 5 years projection. And then we have sales and collection. We have depreciation formula, okay, that you will intend to use. Will it be a straight rule or others? Okay. Then we have tax rates and exemptions. We have inventories that's from beginning and ending for all your raw materials and work in process and finished goods. And then we have dividends to be declared, if any. No? But since dividends are only declared part of corporate operations, then you might find it not applicable in cases involving partnership or single or sole proprietorship. Then we have inflation rate, price level changes, and foreign exchange rates. That is if you have, for example, foreign counterparts or foreign investments. Then comes your projected financial statements. Okay, so which will begin with the pre-operating period. Okay, so in the pre-operating period, okay, um, you will need to present your balance sheet and cash flow, and you could use the following pro forma, okay, in order to point out the balance sheet, okay, for your proposed business. So we have the following for example, but you will need to check on the latest formats as there might be some um, technical um, or layout changes, but I suppose this will be uh, in order for to start with. Okay, in so far as your financial feasibility is concerned. Okay, so there you have your balance sheet format per forma, and then this one's for the cash flow. Okay, so just have all the figures properly aligned. Remember that accounting, okay, basically is an art. Okay, so you will need to have it executed in a very artistic manner, such that all the figures are properly aligned. That's why you have your digits, okay, for basis of alignment, right? So that will be for the pre-operating period cash flow. And then we have for the operating period, so just the same, but this time you have now the projected balance sheet, okay, which will cover for at least 5 years. Okay, so you will need to have a 5 year projection. Okay, for example, based on your estimation, the first year will be 2022, so you will need to replace year one with 2022, year two with 2023, and so on and so forth. Okay, so this is how you'll have to um, organize your projected balance sheet. So we begin with the assets, particularly for the current assets, okay, in the manner as follows. So we have cash on hand, cash in bank, marketable securities, accounts receivables, and that is to deduct your allowance or bad debt, allowance for bad debts. Okay. Then we have notes receivables, accrued interest on notes, other receivables, and then we have finished goods, goods in process, raw materials, manufacturing supplies, all for inventories. And then we have prepaid expenses such as supplies on hand, prepaid insurance, and the like. We have other investments. Then we have fixed assets, which will include, among others, land, buildings, machineries and equipment and accessories, and the like. Okay, and then we have less accumulated depreciation. Then we have intangibles for goodwills, patents, leaseholds, and other assets like advance to workers, long-term installments, deferred charges rather. But you see, the uh, the entries that you will have, part of your financial statements will vary depending on the type of business that you would like to put up or establish. Okay. Then we have the liabilities and the stockholders' equity. So you have here liabilities, which will include current liabilities for accounts payable, like trade notes. Okay. Um, we have income tax payable, if applicable, bank overdrafts. We have dividends payable and the like. Then we have long-term liabilities like bonds payable, premium and bonds payable, etc. Then the total liabilities. Then we have the stockholders' equity. Okay, for owners' equity or for single or sole proprietorships, we have partners' equity in partnerships and stockholders' equity for corporations. Paid in capital, we have additional paid in capital, retained earnings, appraised capital, treasury stocks, other forms of capital or equity. And then we have the total stockholders' equity. And then less treasury stocks at cost and others. And then we have the total capital, okay, after which you will have the total liabilities and equity. Okay. Then we have the uh, further discussion on depreciation theories and its types and sample computational procedures, which you may find in Annex 8.2. So please check that out so that you can properly fill out the depreciation portion. Then we have a similar financial statement, particularly projected cash flow statement, okay, for the operating period. Okay. And then we have the different schedules like cash disbursements and others. Okay. Then we have cost of goods manufactured and sold. Then we have the financial analysis. Okay. So in the financial analysis, we will have the following ratios like ratios, rate of return and cash payback period for each of your projection years and entire projected operations. Okay, so we have, for example, measures of profitability, measures of assets use. We have measures of liquidity and the use of debt. Okay, and for better understanding of all these ratios, okay, check the further explanation which you can find in the next 8.3. Okay, then here are pro formas for break-even point summary involving single product or multiple product as the case may be. Okay, and then here you will now present a sensitivity analysis of your project, okay, by observing the proposed tabular presentation. Okay, and you may also um, try looking for the effect of changes for financial and or production items to see how sensitive your project is. So here you will need to explain the effect of these changes as they affect department sections of your projects or of your entire operations. So if your project is part or related to an existing entity, okay, a side-by-side comparison of present and projected figures of this same items will be a good presentation for your justifications of feasibility of proposals. Okay, so these are the more important aspects of the financial feasibility. Okay, and after having presented the required minimum required uh, discussions, okay, then you are now ready to proceed to the next and the last aspect, which is the socio-economic feasibility. So the fifth aspect of the financial feasibility of the feasibility report, rather, is the socio-economic feasibility. Okay, so this chapter will present how entities other than the project proponents will benefit as a result of your project. So you will need to identify what will be the benefit, whether direct or indirect, in terms of personnel, the government, and other outside businesses and entities. Okay, so you will need to uh, initially identify the project's employees. So what will be required in the first year of operation up to the fifth year of operation as the least. Okay, so all the benefits your project's employees will receive, including superficial benefits like increases in the standards of living. So these are now what is referred to as your quantitative and qualitative uh, measures of uh, of benefits. Okay, so like higher purchasing power, okay, um, monetary benefits, for example, and so on and so forth. Then we have the benefits that the government will derive from your project in terms of taxation, for example, or the um, levies that will be imposed upon your business entity, okay? And other beneficiaries like other people, businesses, and organizations. Okay, and you will need to also state environmental impacts, okay, to be expected as a result of the implementation of a project. Okay, impact on population, ecology, like it will uh, protect the environment, something like that. So you will need to have all this accounted for in the last aspect of the five section feasibility analysis. Okay, so this will be the last part of the feasibility analysis. So before making any financial final conclusions about the feasibility of your project, okay, you will need to review everything from the start. Okay, so make sure that all the proposals or the stipulations in the feasibility study or analysis are consistent with each other in all of the aspects. And should you find any inconsistencies, okay, make the necessary modifications or interventions as soon as possible, okay, so that everything will run, okay, in a parallel direction. So there is, however, one more thing that you will need to include in your project study. That's your project's implementation pre-operation table. And the last chapter before your conclusion, you would make your study one step closer to implementation. So I hope that this guide, okay, will help you, okay, in the completion of your um, feasibility study report. Okay, So that's about it for today. I thank you so much and God bless everyone. Keep safe.